In a year where Bitcoin reclaimed the headlines and meme coins hijacked, the attention of retail investors for Ethereum has remained quiet. Ethereum has become a quiet, sleeping giant outlier in the crypto world. It didn't crash, it didn't explode, it just lagged. While Bitcoin surged more than 50% on the back of ETF approvals and the mainstream adoptive narratives, Ethereum drifted sideways, and in fact it's actually lost ground in relative terms. As of mid this year, the Ethereum-Bitcoin ratio is down over 26.6% year to date, a brutal divergence that has left many wondering, did Ethereum miss its momentum? The short answer is no. In fact, what may appear on the surface as stagnation is actually the quiet setup for something far bigger. Ethereum isn't lagging because it's weak, it's lagging because the market hasn't yet caught up with what Ethereum is becoming. Unlike Bitcoin, which seeks to be a store of value, Ethereum is becoming the settlement layer of the global financial system, and that transformation is happening with extraordinary speed, just not in places retailers looking. But that's only the beginning. With the implementation of EIP 1559, every transaction on Ethereum includes a base fee that is permanently burned, removing Ethereum from circulation. And as usage increases, so does the amount of Ethereum destroyed. This burn mechanism has turned Ethereum into something that no other major blockchain can currently claim to be: deflationary. In 2023, Ethereum's net supply growth dropped to just 0.55%. Last year, it was deflationary below minus 0.28%. And of July this year, over 1.63 million Ether was burned. That's 5.5 billion. And as a side note, the inflation rate this year for Bitcoin has actually been higher than the one from Ethereum. That's not theoretical, it's on-chain, visible to everyone. Meanwhile, while Bitcoin's ETFs drew attention in early this year, the institutional shift into Ethereum began to quietly accelerate. Not too long ago, Bitcoin ETFs from giants like BlackRock, Grayscale, and ARK Investment recorded over 200 million in net outflows, as the Bitcoin price actually plateaued near 105k. Retail investors cheered, but institutional began trimming. At the same time, Ethereum ETFs told a very different story. Price actually dropped to 2.536, despite the massive inflows. In the last year alone, over 908 million were collected in inflows, and just in June this year, over 200 million. But the real transformation is playing out in a place almost no one is watching: the intersection of Ethereum and traditional finance. Ethereum is rapidly building the default infrastructure for tokenized real-world assets, treasuries, bonds, equities, and commodities. As of July, over 7.5 billion in tokenized US treasuries now exist on-chain. More than 88% of these are issued directly on Ethereum or Ethereum-compatible networks. BlackRock's flagship on-chain money market fund, BUIDL, operates on Ethereum Layer-2 infrastructure like Base. Beyond treasuries, tokenized global bonds have reached a market cap of 297 million. Tokenized private credit accounts now for 14.88 billion in active loans, and the tokenized gold stands at 2.05 billion. And tokenized equities have also massively grown to 421.39 million. But it's not just the market capitalization that has exploded. Also, the usage metrics followed the suit. The number of holders, active addresses, and monthly transfer volumes across these assets have surged, with Ethereum serving as the industry standard for most of them. More than ever, Ethereum is where tokenized assets live, move, and scale. And yet the price of Ethereum still continues to lag. Despite all this, Ethereum is still down in USD in terms of last year. Ethereum Bitcoin pair is at a multi-year low. So what is holding Ethereum back? Well, there are actually 4 key reasons, and each of them is more a mirage than a meaningful obstacle. First, Ethereum suffers from a narrative vacuum. Bitcoin has a crystal clear story: it's digital gold. Solana is fast and cheap. But Ethereum? It's more complex, it's modular, it's multifaceted. DeFi, NFTs, staking, tokenization, layer-2s. That nuance fit in a meme or a tweet. But institutions don't need simplicity, they need functionality, yield, and scalability. And Ethereum delivers all 3, elegantly, and at a scale, and now with a growing regulatory clarity. Second, Ethereum's growth has migrated to layer 2s. Arbitrum, Optimism, Base, ZK Sync are absorbing the bulk of retail and DeFi activity, dramatically reducing fees and improving transaction speed. On the surface, it may look like mainnet usage is flat, but that's misleading. All of these rollups settle back to Ethereum. Ethereum is still required for finality or for fees and for security. Ethereum isn't losing users, it's scaling through delegation. Third, Ethereum isn't a shiny object anymore. Retail traders are chasing meme coins from Solana, gaming ecosystems from Avalanche, and airdrops across new chains. But Ethereum isn't no longer in that game. It's playing for the rails. It's building the equivalent of AVS in crypto. And like AVS, its value doesn't show up in speculative pumps. It shows up in revenue, stability, and deep integration into every layer of the market. So where does this leave us now? Well, looking historically, every major Ethereum rally has followed the same pattern. First, Ethereum Bitcoin bottomed out. Then the narrative shift began. Institutional inflows increased, and then Ethereum outperformed Bitcoin by 2 to 3x. It happened in 2017 and in 2020, and again in earlier 2021. In each of these cases, the Ethereum Bitcoin reversal came first. Right now we're back at those levels. The chart has been compressed. The spring is coated. All it takes is a trigger, an ETF milestone, a BlackRock-led RWA initiative, a spike in L2 usage, or another deflationary supply milestone. Once reflexively kicks in, prices rise, yields look better, burn rate accelerates, usage grows, Ethereum becomes its own flywheel. And when that starts, the market won't just reprice Ethereum, it will re-understand it. Ethereum has been underestimated. The divergence between price and progress have never been greater. But when markets realign with reality, Ethereum won't just catch up, it can completely break out, violently, structurally, and globally. This isn't just the next rally, this can be the foundation of a new financial system. Ethereum is already building it. And in my opinion, I can see a massive upside potential in the upcoming revaluation. Of course, remember that this video is not financial advice. It's just a topic that I find super interesting. But of course, it's not financial advice, and it's just meant to be for educational purposes only. With that being said, what do you think? What do you think? Is there an upcoming Ethereum rally? And if yes, how high can Ethereum go? Or do you think Ethereum is actually overrated? Let me know. That's it for today. I will see you in the next video.